Dan Fitzpatrick here, stockmarketmentor.com. And I want to show you a trade that if you're a member, you know this already, but if you're just on our free list, that's fine too. But I want to show you a trade that we made on Robinhood, where we got a little bit of a late entry, but it didn't really matter. So I want to show you this and how we managed this on Monday, May 12th, when the market opened up. So this is the deal. So this is where this stock was on the 6th. And I've been talking about for a while. Well, you see, I've had drawn these circles for a while, talking about this inverse head and shoulder pattern. This would have been the top, like the middle part of the W, down here, up there, and then back down, and then up here, and then wherever you want to put the end of the W, here or there, doesn't matter. But the bottom line is it's a lower low still, and then a higher low. So we get this inverse head and shoulder pattern, which is a bullish pattern. Typically, in this case, it would be more of a continuation move. This was a massive distribution, as we saw with so many stocks since the highs. This was particularly notable, but the uptrend remains intact. You can see the 200-day moving average drifting up continually. So even though this had this big, massive correction, if you're really looking at this from a standpoint of, is this still in a secular uptrend, or is this a complete reversal? At this point, frankly, you really don't know yet. It'd be nice if we had predictive powers, but we don't. So peaks up here, falls down below the 50, doesn't hit the 200, but still, this is a massive break. And then this comes back up here to test the 50, and that fails. By the way, this was, just so you know, little inside baseball, this was the day where a short position could be taken. I wasn't shorting stocks, so don't think I'm saying I did take it. I didn't. But this is just from a chart and trading standpoint. When a stock breaks down like this, just gets crushed, and then comes back and tries to regain the 50-day moving average, and then it doesn't, then what you do is you go ahead and short the stock. I don't know, anywhere, hopefully you're watching it intraday, and you go, okay, well, crap, this thing tried to get up and it couldn't here. So you're shorting the stock right around 47.50-ish, something like that. And then you're going to keep your buy stop just above this prior day's high of 49.88. So we'll say like $50.01 or something like that. So that's how you would have made a short on this broken stock. But it continues to fall down lower low. And by the way, you could say, oh, well, what about the 200-day moving average? Same situation? Well, same setup, but it didn't work. Here, the stock falls below the 200 and then immediately regains it, whereas here, it didn't. There's all this other stuff that I could be talking about in that, and I will be showing you a lot of this stuff in an upcoming class, which I'm sure you are going to come to. By the way, we'll put in this email a link to the registration for a class that I'm teaching next Tuesday. Hell, it's tomorrow. Tomorrow on an introduction to smart trading. That's my methodology of trading. So hopefully you'll check that out. And you can always just go to our homepage and find it there. Anyway, I digress. So we come up here. Now we're on the 14th of last month. So it's close to about a month ago. And then we get a move lower, and then finally we're up here. So this is when you got to start looking at this, saying 3 days in a row of green, close to this 50. I need to start watching this here. Okay, glad I didn't buy it. Like, its trading isn't that precise. And then this just kind of flutters around here for a while, and I'm saying, guys, we need to wait and see, watch this, because I don't want to trade before the breakout, but once the stock gets above here, then we want to be snagging it. So now we get this on Thursday, right? And so what was I doing? Well, to be honest with you, I was at the shooting range requalifying for my CCW out here in California because that's what we all do in Orange County. And so I missed this trade. A lot of our traders didn't. They caught it. And the next day, it's up here. And I'm saying, you know what? Screw it. Let's do it. We're still okay to be buying on the following day because of this pattern. Now, ultimately, I think this winds up going to 65, not in a straight line, but that's really what this thing is looking like to me. This is not even the point of my video. The point of my video here is to stress the idea of taking profits when you have them. You can see the stock's up by 4.5% even now, but it opened like what, 8%? It opened 8%, over 8% above Friday's close. And then at one point it had fallen from the high 5.5%. So if you just sat here on a position that you had and just said, well, I'll just let it work, that's fine. You can do that. I think the stock's ultimately going higher, but you gave up 5.5% on the downside. And if you're just talking about the profit that you had, you've given up half of your gains, probably more so on a percentage basis. So the point is, on something like this, you got to be selling into strength. You don't have to take it all off the table. You see what I had done this morning. I actually got everybody online at the open so we could do this kind of thing where we look for the stock. Look at the stock here, daily chart, 15-minute, 5-minute, 1 minute. Forget about the 1, so we'll set this at 5, we'll set this at 10, we'll set this at 15 is fine. And you could see, like right from the get-go, stock opens up and virtually immediately starts trading off. That's when I had mentioned to our folks online, go ahead and take some profits here. Take this off the table. And then the rest of the day here, this has been trading below the volume weighted average price. It's getting kind of close together, but it's noontime. That's what happens. So the gist of this video, of the message that I'm giving you is, when you have this kind of big move higher, even if you're a longer term investor, turn into a trader for a minute. You don't have to take it all off the table, but you do want to take some of it off the table. So put on your trader's hat, book some profits and say, Mr. Market, thank you very much. I'm going to keep some, take that on the road. Can we box this up? And then you've got a lower cost basis in the stuff that you have left, but you've also got not just the monetary reward, but the emotional and mental reward of having made a good trade. So whether you are a short-term trader or a longer-term investor, and I know a lot of people, typically people with more money, are going to be looking at stuff like this and saying, well, I'm just holding this for the long term. I'm not really interested in day trading. That's fine. That's fine. But you still need to know, you want to know certain things so that you can be taking advantage of market movements. All right. You want to learn to be a victor, not a victim when markets turn around so much. So anyway, that's all I got for you. And watch for an email or two on for information on my workshop tomorrow night. I want to make sure you show up. And if you do, if you don't, you missed out. I'll just tell you that. But if you do show up, I'm just going to tell you this. You need to stay right till the end because I've got something for you right at the end. But if you don't stay right at the end, then you're not going to get it. All right. I'll see you later.